Good day everyone, Les here from BG Trading and I hope you are well. Today is 28th of September 2023 and my question is it time to buy lithium stocks again or we should be waiting a little bit more? And what are the lithium stocks which we would be buying and which ones we'll be avoiding and why? I'm going to explore the technical aspects of those stocks and a little bit of the fundamental aspect so you understand a little bit the degree of the risks in which you would be involved if you buy any of those stocks. Also, let's take a look quickly on the lithium prices as well and make our final decisions after this particular video. So let's start now. Before that, I just want to remind you, this isn't financial advice. It's just as from BG Trading sharing with you how we apply our BGS20 strategy to chase 20 to 40% profit together with our VIP members using our strategy. How we set up targets, stop losses, and much more, all in this channel. So if you like, please subscribe and also like to invite you to become a member of our free Facebook community, Buy, Grow, and Sell Strategy for share traders. We post a lot of great quality content, some of our stock analysis, market update on a weekly basis, and we also have a fantastic conversation with our members about potential buying opportunities of stocks that are trading at technically discounted price or simply in buying areas. So why are you waiting to join our community? Now, let's start our analysis with lithium prices. What's happening in China at the moment and with particular what's happening with lithium prices across the board. So one of the reasons we decided to put this video about lithium stocks today is because lithium prices have sort of reached what we call like hypothetical support. In this case, really support level. And every time anything reaches a support level, especially stock or a particular commodity or something, then it tends to sort of hold for a little bit and potentially even bounce. So we're looking very, very closely, and if we go across each of those indexes for lithium, we can see there was a stop. I have been tracking all those indexes, including lithium hydroxide, spodumene concentrate, lithium industry grade, lithium battery grade, every single day since July. And this is the first day that hasn't gone in red. So this looks like has sort of, those index has found a bottom right here, but it still is yet to be confirmed. But every time that happens, we should be looking into, okay, this is now could be a potential opportunity to buy into lithium, hoping that we effectively see those lithium market indexes going into green in the following trading sessions. So it's yet to be confirmed, but we have seen, according to Shanghai Metal Market report that we had last week, lithium hydroxide export has started to increase in August and also in September. So that is positive for lithium prices, but we still need to see some green days. The problem really is with lithium was overstock of lithium by the battery manufacturers. So now we could have seen those stockpiled to digest, and if that's the case, we will see higher activity in purchasing lithium, and then that's when we'll see the prices bouncing back. So we still yet to confirm. So now let's jump to the first stock, which is Pilbara Minerals, which is the ASX code is PLS. So before opening the chart, let's take a look here. Pilbara for us is the leading ASX lithium producer. And if you look into this, and I always tell here, if you don't want to research about company, we do all the research for our VIP members here anyway. But let's say if you want to do it yourself, you want to just take a look at this, go to asx.com.au and take a look what's happening with the lithium, with the company fundamentals. And that's the best, the easiest way is the company paying dividends, is the company generating revenue, is the revenue increasing year on year, is the company a net profitable company? If it's yes, is the net profit increasing year on year? That's all fundamental metrics that we teach you into our online course if you're interested to learn a little bit more. But you can simply take a look at this right here. Obviously, you also need to look what is the outlook for FY24, because we only have 22, 23 information here. We don't know what's going to happen. And obviously, with the lithium prices lower, so the FY24 will tend to be in line to what's happening with FY23 or a little bit below. Obviously, most of these particular fundamental change has been already priced into the share price of those particular stocks. So if you look at Pilbara Minerals, it's currently trading at what we call technically discounted price for the short term and for the long term. Now, you might be asking, what technically discounted price really means? So essentially, in a quick way to explain, just means that the candles, the share price is trading under those two lines here, the red line and the pink line as well. So if you look in the RSI, the RSI is trading flat, so it doesn't look very appealing from the RSI movement, but I'm more concerning to what's happening with the lithium prices than anything, because I know if the lithium prices bounce back, the underlying demand start increasing again, then obviously we will see those stocks also bouncing back. The thing here is with Pilbara, as you can see, it has bounced from its long-term ascending support line. This is a very strong support line, it's ascending support line, and I've saw not just Pilbara but also mineral resources doing exactly the same. So for me, if I was going to buy into lithium stocks now, I would pick up most definitely to have full exposure to lithium in a very high quality business. I would pick up Pilbara Minerals as my number one lithium picked up now. All right, definitely for me, Pilbara would be a buy opportunity at the low $4 or under. As per if lithium prices obviously bounce back. But even if lithium prices stay at the current levels or even fall a little bit more, these are the stocks that tend to hold its value way better than the speculative stock. Let's take a look at this. At the top, Pilbara was worth about $5.40, and then just 20% down from its high. Whereas if you go to more speculative stocks such as Core Lithium is a stock that has been incredibly profitable for us. And I'm gonna go later than Core Lithium. I just wanna show you side by side exactly what I'm talking about here. The peak, comparing the same peak, Core Lithium was trading at $1.16, and then now is 72% down. So imagine this, if you're holding at the top both stocks, Core Lithium and Pilbara Minerals, Pilbara, it would only be down by 20%, where Core Lithium will be down by 72%. That's because the fundamentals, if you don't believe in fundamentals, you shouldn't be trading or investing. This is my recommendation. Okay, I cannot provide you financial advice, but I can provide you a recommendation that you shouldn't be trading any stock if you are not willing to understand what's happening behind the scenes. It's very dangerous. You're gambling. You should be going with cryptocurrency, for example. So this is the difference. The company has been generating very, very little revenue and is a net loss company. Now, the question always the same. Why are you going to be buying a stock, a company that is not generating any profit? Okay? Obviously, there is a lot of arguments out there, but in this case, if the commodity decline in the company is not a profitable company, is a company that generates losses, obviously the stock price is going to go down, and way faster than a profitable business that pays dividends. Okay, just think that way. This is Core Lithium, by the way. I was going to leave it to the end, but let's compare side by side. You see, there's no clear signs of reversal. Okay, I even got the RSI here, which it looks well. Look, it looks very bearish, to be honest. And if you go to the short term, looks a little bit. Looks like we have a bullish divergence, but again, all those bullish divergence, RSI, MACD, anything makes absolutely no difference if lithium prices continue to fall. That's the bottom line, and that's where you should be looking at lithium prices, what's happening on a daily basis. If it bounces, then definitely should be looking at potentially adding some of those stocks. Okay, I'll let you to decide based on this. But again, the leading stocks are the ones that tends to bounce a lot faster than the more speculative stock, or the ones that are not producing profit yet. So I would leave, although we made a lot of money with Core Lithium in 2021 and 2022 during this huge rally. Now Core Lithium is a producer that is not profitable, and as long as Core Lithium is not profitable, I think it's going to be struggle, because all the hype on those macro stocks has already passed. When there's a hype, there are not very rational thinking behind buying those stocks. Everyone is buying just because these stocks are rallying. But in this case, when the company now is producing, and then you have a clear understanding of what the fundamental metrics and the true value of the business is, you should be just aware that the company is becoming a little bit more mature, and the real value is not longer there. If you compare to producers that are net profitable. The second one now we're actually doing two stocks now. Now let's jump to ALLKEM Limited. And sorry if I'm a little bit too intense today. Okay, so ALLKEM is pretty much in line with Pilbara Minerals. The difference with ALLKEM is that ALLKEM is a producer, developer, and explorer. I have a full dedicated analysis for ALLKEM. I like ALLKEM Limited. It is a stock that trade swings in a higher range than Pilbara, but is exposed a little bit more to fall. So it's essentially, if you have bought ALLKEM at the peak together with Pilbara, you would be down by 22%, Core Lithium by 72%, and Pilbara and ALLKEM Limited, you would be down by 33%. However, the upside is also better than the other stocks, where you go more conservative for 25 to 30% with Pilbara. You could aim for 40% if you have a solid rally on the lithium prices. So this is a more versatile, a little bit more daring, but it's still a very high quality business. If you look into its fundamentals here, you can see that the company has increasing its revenue year on year and is a high profitable company. It doesn't pay dividends as Pilbara, which makes the share price more subjective to massive swings, because it is a company that has more growth, but it could be a lot more profitable as well than Pilbara in the short and the mid-term, should lithium prices bounce. Okay, so now let's move to mineral resources, which the SX code is MIN. Okay, this is a stock that is trading into this very long-term ascendant support, very high quality business as well. And if you want to buy into a company that has lithium exposure, but you they want to take the risks of have full exposure to lithium, this is an iron ore and lithium stock. So if iron ore moves up, these stocks tends to move up as well. If iron ore moves down, this stock tends to move down. So it's a double diversification here. And even if iron ore goes up and lithium price goes down, this stock can hold really well with share price. So you are not completely exposed to lithium. So it diversifies the trading strategy, okay? And it is trading at technically discounted price. For me, it is a buy opportunity right now. Although there's the share price has broke out this hypothetical support here, but bounced on this long-term support trend line there, and we're likely to see it's bouncing again from its long-term support, and potentially going up towards to $80 once again. Should we have a bounce on across the board in the market. So 20% would be potential opportunity here for this particular stock as well. So all these stocks, they may sound a little bit boring. We are not in the market to double money or to make 60-70% in the trades as we were in 2021 and 2023. Understand that. Stop chasing those huge gains because it's not gonna work. It worked last year, it worked the year before, but this year is not the market to do that. You gotta be more conservative. You gotta have a more conservative approach to trade those, trade in this market. That's why we're picking up high quality companies, okay? And the next one is IGO Limited, which is also a lithium. You buy this for a lithium exposure, but it is a diversified stock as well, a diversified company, just as mineral resources, but not specifically iron ore. IGO operates in the nickel, copper, and cobalt markets as well. So you have a more diversified battery material approach with IGO. Incredibly high quality company as well, just in line with Pilbara, ALLKEM, and mineral resources. IGO is a net profitable company. And if you see here, the revenue has continues to increase year on year. Company pays dividends and the net profit year on year also has increased. So high quality business for a much safer exposure to lithium. The stock has fallen from $16 to $12.30, which represents 25% fall. Okay, why speculative stocks you would have taken 75 to 80% fall on the stock prices, and this shows how important is in a market like this to stick with high quality businesses. Extremely important. Okay, so IGO also buying opportunity for us, and obviously you need to set up targets and stop losses and stuff. So we do that for our VIP members. But if you're looking to have exposure, safe exposure to lithium and other battery materials, so this could be an opportunity for you right there. Even though we're still in decline on lithium prices. Now let's move to a more speculative stock, okay, which is also a producer. We're going to talk about SAYONA Mining. SAYONA Mining, and I'm going to compare. So if you have held SAYONA Mining at the peak in comparison to the other ones, so SAYONA Mining has fallen 71%. Okay, 71%. Question is, why has fallen 71%? Why? While the other stocks has only fallen about giving or taking 20 to 25%, because the quality of the business. SAYONA has just become a producer recently, and as you can see here, the company has only started to become profitable, but there's no revenue. This profit is obviously not a profit; it's from capital raising. The company is still trading a net loss. Okay. But it continuously to raise capital at the discounted prices, misleading shareholders in that sense. Sorry, I'm not going to say misleading, but if you're a shareholder of a particular company and a company, the stock's trading at 20 cents and they issue capital raising at 16 cents, for example, the stock price will be 60 cents in no time. That's what happened with SAYONA Mining, Core Lithium. They keep raising capital. So how you can trust in the company there, even though they're producing revenue, they keep raising capital. So they're trading at the expenses of shareholders. And this is not good for this type of market. If it's a ascendant market, that's fine. Everything is going up. But if it's a declining market, definitely is not a good thing. So I would stay away from SAYONA right now until we see a solid bounce on lithium prices. But even though I'll be only trading the leading stocks, I won't be touching on more speculative stocks at the moment. LKE Resources. A lot of things going on in LKE Resources at the moment. Obviously, they're trying to recover its trust from the shareholders. Since there was a huge delay on DFS, The stock has fallen from its peak as well. In May peak has fallen 75%. Okay, not to mention from last year, which has fallen about 86%, but 75%, again, this is to do with the nature, the risk of this particular company, the fundamentals. You understanding the fundamentals of the company and you want to speculate, that's fine. Speculate for a trade. Now, if you're going to speculate to invest, you got to be really, really careful, okay? Because you're buying something that has no value, no value. And that's why, you see, there's no revenue coming up. It's not going to be any revenue for the next probably 3 years. Only net losses at expenses of shareholders, because we most likely will see more capital raisings on the way, so this company can survive. So why would I be investing in this company right now? Now, I'm only trading. This is a trading stock, as well as Lithium, as well as SAYONA mining. But even though I wouldn't be trading in these markets, very, very dangerous, okay? Very, very dangerous. RSI looks a little bit okay, but again, I'm more interested on what's happening with lithium prices, and I don't want to take risks on those particular stocks. So this shows why when you trade in this particular stock, you must have stop losses. If you have stop loss right here, you would protect yourself from easily 50% loss. And that's exactly what happened with us in our last trade with Lithium, Lake Resources, and even SAYONA mining. We cut losses right at the top, and we could have sitting at like 60-70% loss now. We only took about 12-15% loss, and that's it. We took a loss, that's fine. No? And now we only look in the good quality companies, high quality companies. That's what you should be doing, honestly, in this particular market. Obviously, market could shift next year. If interest rates comes down, if lithium price goes nuts again, it could shift. But looks like there's too much supply of lithium at the moment, and not enough demand. So we need to look at lithium prices very, very closely. And remember, if lithium prices bounces, the leading companies will be the stocks that are going to go up first. And potentially even can make money out of the leading stocks. And then after trying to chase the more speculative stocks for a potential rally. Okay? That would be my take on those lithium stocks. So some of them are buying opportunities, but some are not buying opportunities. Just to wrap up this video. Okay, hope that was valuable. Sorry if I messed it up a little bit, the way we communicate, but this is, at least we're trying to be clear to help you guys to make better decisions and fantastic trades. I'll see you in the next video. Bye.